All right, what is going on, future me? Obviously, with every week, I want to put together my pre-market plan for this coming week. Um, and yeah, I mean, just kind of jump straight into it. We are looking at the dollar at the moment, the Dixie. And with that, a lot of the price action that we spelled out last week is kind of what was expected into this week, and we saw exactly that, right? Further dollar downside after rate hikes and after Powell, comes out, speaks and goes into why he's raising rates and how he feels about inflation and how we're tackling it and everything else. And it looks like we're reaching a point. We did raise rates by 25 basis points, making the federal funds rate 5%. I'm sure that'll roll over into higher mortgages and everything else, but that's not what we're here to talk about. Um, there was a point in which Jerome Powell mentioned that, of course, further rate hikes and maybe even more aggressive rate hikes would be needed into the future. After coming off of a kind of, it was an improvement as far as the CPI print is concerned. A lot of people are speculating whether or not we'll start to pivot or pause rate hikes in like Q3, Q4 of this year, which would be interesting to see. A lot of people are saying we definitely have two more rate hikes into the coming months of April and May, but thereafter we might be starting to get into a space where Jerome Powell might be wanting to pivot. So just something I thought I'd share and an observation I was wanting to make here as well. But more near term, we do have a couple of different news events this week. We do have core PCE for the dollar on Friday, as well as a final GDP on Thursday. Outside of that, nothing super crazy like U.S. Pending home sales on Wednesday and everything else, and then consumer so UOM sentiment on Friday, consumer confidence on Tuesday. Excuse me. So definitely a slower week in comparison to the previous weeks we've had, but there are still a couple of drivers that could, of course, act as catalysts for bigger moves in the market. Where we're at the moment, just technically speaking, right? We moved right back into that 103 area, and right when I get it, before I get into the weekly, we'll see that there as well. But this is still a level of structure. Looking left, obviously, this is sort of a range mid between this range low at 101 and that range high 103.50, which is a range mid to the range high at 105, that bounce brick level. And so, as we know, right, my particular strategy, everyone's different. I play these things level to level. Obviously, I'm not trading the index, but I am using it as a piece of like, acting in confluence with my execution on gold. So, as far as it's looking right now, obviously this being a range low in my system, I would be seeing, I would be expecting at least a small bounce and retracement back into previous levels that we broke into. Obviously, first area of interest being that 103.50 sort of area, and then thereafter we do have a very nicely lined up 618 at 104.50, 105 sort of area in confluence, obviously, with where we just broke down from. So it does make a bit more sense. That does add a bit more context as well for a potential lower high here. And especially after, coming off of such a big week of news, it's slowing down a little bit. It just makes a lot of sense for, price, even on gold, and then with relation to the dollar to be retracing before a further move to the downside. And so that's just the way I'll be playing it, right? Obviously, level to level, we do have this small descending channel, this trend line here as well, looking very fickle. And as we know, when we see these fickle trend lines like this, it's not very hard to see price push past that and make a move higher. And so that's exactly how I'll be moving into next week and kind of taking a look at it from. And so when we look at it on the weekly, adds a bit more context here as well. I did, kind of spell out this big rejection of the 382, that 105 area, 106 level here to spell out further downside. Because again, we did get this big break, a big retest, and now you would expect, of course, a move lower. This most recent weekly candle print is, being a little bit difficult. I'll be honest with you. Printed right above 103, that big, obviously monthly level of structure. I would love to see a solid body close below 103 to confirm further downside. Until then, we're kind of playing around, right? Not only that, obviously, with the added context on the daily time frame, we are sort of bouncing this little evening star, or rather, this little morning star reversal back to the upside in previous levels of structure. It could spill out a little bit of consolidation between this range, right, of that 105, 106 area and that 103 level between the daily and weekly charts, especially when we get a candle close like this, right? Big wick rejection to the downside. Solid body did not get back below 103. These are all nuanced things that very much matter when we're talking about technical analysis and price action. So looking at it through that lens, I'm going to want to, again, sort of play it by ear and see how we print into this coming week, how price plays out and everything else. Overall, my sentiment is that we get a retrace early in the week. we start to break through this channel early in the week, get a retracement either at this area of interest at 382 or 103.50, or we move a bit higher than that into the 104.50, 105 is a sort of area before a further move to the downside. But it can be swift because again, we do have PCE numbers coming out, and after the last PCE release, there was a pretty big move. I forget what candle it was. I don't know if it was this one right here. It was a Friday. I think it was this one back here. I'm not too sure. But regardless of that, we do have, again, enough news this week, even though it's not that, it's not a ton. We do have enough news this week to make that retracement and break back down valid from my perspective. I don't have a crystal ball, so obviously I don't know, but that is my overall stance and what I'm sort of looking to see into this coming week. A big retest, retracement, move to the downside. And when we look at it on the monthly, it doesn't add a ton of context here either. 5 days left in the month, and we're still looking pretty indecisive as far as picking the direction is concerned, right? We are coming off of that February sort of engulfing candle off of 103, and we're still sort of playing around in that same area. If we can continue to engulf to the downside into this coming week and break back below and solid body close below 103, obviously that'd be a lot more bearish of an outlook into the coming weeks. Otherwise, if we continue to make sort of lower wick creation and push back up, I'd really be iffy. Honestly, as I mentioned, most of this month, right, I'd be looking more so toward the weekly and monthly charts for added context and where, and trying to understand where price is going to end up next. So overall, once again, we do have this descending channel. I am expecting a rally, a retrace of the dollar early into the week. Maybe Wednesday, Thursday, Friday, we start to see that reversal back to the downside into the 103s based on what the press releases and everything else look like. Obviously, that could just not happen, right? We can break all the way back down. But again, just giving my perspective, playing this level to level, and just going off of, my understanding of, these sorts of structures and everything else. So with that said, that leads me into JPYBasket. Very interesting week for the yen, let me say. And once again, this is something that I outlined in my pre-market plan last week. Let me take a sip of my coffee, 1 second. And so, right, being that we play these things level to level, once again, we did have the 786, the 618 here, but I did mention that as long as we are above and within this range around 8040 or 8050, excuse me, and 8400, we do have a very high likelihood of moving into the range high, right? You break into a range low, it moves into the next area of interest, which is then the range mid or the range high. That's exactly what we saw. And even to add a bit more conviction into the plan for this coming week, as we can see, price respected this level of structure as resistance. Not only that, not just the range high, this liquidity zone, but also that trend line that we see here on the weekly. And so when I look at it from that perspective, I'm thinking, this is a pretty solid rejection, right? Are we going to get like a cup and handle here, right? Like, are we going to get a retest of 8040 before move higher? And when I see a wick like this, a rejection of that range high, that's exactly what goes through my mind, right? You get a big rejection, a push into the range high, and then a rollover back into the previous level of structure that it broke out of for a retest before it moved higher, right? And so that's exactly what I would be expecting into this coming week. Big wick rejection on the most recent daily candle close. So of course, also kind of in confluence with the 786, although it is a little bit higher pushing through, it still has that added confluence of the level of resistance, that liquidity zone up here. And so with that, once again, I would expect a move lower back into 8040, 8050 sort of area before a potential move higher, or just roll over all the way into potentially like the 7750s and everything else. And this makes a some more sense when I get into GJ as well, just because GJ does look primed for a retrace as well. It's very similar to gold and what I was mentioning with the dollar and everything else. It does look primed for a small retrace, so I wouldn't be surprised if we did make a move potentially into like 8100, 8050 sort of area before a move higher. Just because again the GJ chart lines up with that very well. And so when we look at it on the weekly, adds a bit more context here. I do want to say, right, like the most recent weekly candle close, it does look pretty strong, although it is kind of like a doji indecision candle. It does have a very long lower wick, rejection to the downside, into this coming week, right? I say this all the time. Resistance is still resistance. If we cannot get a solid body close above that 8400 level on the weekly and on the daily, it's still, I'm still looking for downside, and a move back into the range mid thereafter. Even, regardless of how good this looks, 'cause, even looking left, this January 9th candle, that weekly candle looks amazing, right? Still, resistance is resistance. Gets knocked back. Excuse me. Gets knocked back the following week. And so I wouldn't be surprised if we see the same thing here. Again, adds a bit more context when I talk about the weekly, or rather the daily range high rejection, seeing further downside, a bounce potentially from 80.40 and a move higher thereafter. So, I feel like downside for the yen this week is kind of programmed just because of where we're at on the chart. And once again, this is sort of a bounce or break level at 84.50, 8400 sort of level. So if, we see definitive strength above this weekly range high, then we can start to talk about different things, different levels that we'll be moving back into and everything else. Look at the monthly, right? Monthly looks super strong, regardless of, the fact that we're at the 618. Right? Like, this is a local monthly 618, right? I can move this up here. I can move this up here. There's so many different levels, local levels that we can take a look at and see, where could price end up. But regardless of all these different factors, right? 5 days left in the month. We're still playing around with the 618, but this is a very big engulfing candle, right? Like, coming off of these last two consecutive bearish candles, this is a big push, especially into this descending channel, this trend line. I wouldn't be surprised once again if, we did. I would need to see all the signs, right? Like, I would need to see the signs on the weekly, us getting a break retest above this level of structure, that range high. Same thing on the daily here as well, before I can fully confirm it on the monthly. But if we do get those moves, that next level of structure is right at 8900 type of thing. So again, not gonna rule it out by any means, especially with the way the monthly and weekly are looking, especially where they're at on the chart. Very pivotal points on the chart, I will say. So could be seeing something pretty big out of GJ this week, just because, again, where the yen is at on the chart. Even when we look at it on from the other side, right, we have GBP futures. Nothing super definitive, right? Like, we started the week, we're right here. This is something that I spelled out here as well. Like, this is still, we broke above that local range high, but can we sustain ourselves above it, right? Like, that next level of resistance, that next area of interest, is up here around 124. Oh, what am I doing here? Is around here around 124. And so we're pretty close. Like, we're very close to this. Is very well be a lower high before you push back into that level of support around like 120, 119 sort of area. And so when I compare this price action to what we're seeing on the yen, it just is not. It doesn't have nearly as much momentum. So going into this coming week, I would put I'd put a bit more conviction, a bit more faith into what the yen is doing, if there are bigger moves in the yen, and how it'll affect GJ into this coming week, rather than looking to the pound to see, if we see GJ strength, or if we see pound strength, maybe I should, switch my bias, or if I, the biggest thing I want to kind of look for is to see GJ start to roll over, especially at this sort of point, right, where we just broke above this local range high, this local level of resistance. We're getting rejections and sort of a lower high structure forming around 124, that local level of resistance, right after these local highs that we broke above, excuse me. So there are not many I would say bullish confluences for the pound on the daily chart. Looking at on the weekly, even more so, right? Like, we've been trying to play out this entire inverse head and shoulder formation for what feels like weeks already. Still has not happened. Still playing around at the 618, swing high to swing low on the weekly here as well. So we're consolidating at this point, not looking super good for the pound. And then when I compare that to the yen, although we do have a sort of range that we're playing around in, we're seeing much more definitive moves, much more momentum and steam on the candles overall, right? Like, when we look at it on the weekly on the pound, right, like, we're not seeing any, like, this is we're not doing anything here. Like, this is, like, just to kind of put it into perspective, excuse me. And so once again, as long as these two charts are decoupled, I am a happy boy. I don't have to worry about anything else. Obviously, once again, being that We have the pound where it is on the chart at the moment. Local just broke above a local high, reaching that sort of range mid, which is now sort of a range high between the range mid at 122 and 124. That local level of resistance that we could potentially be forming a lower high at and rolling over from. I would be expecting more downside for the pound, especially after seeing their rate hike. They also raise their rates by 25 basis points. Typically, when we see a rate hike from the pound, they always end up dumping, and that's exactly what we saw on Thursday. You could literally see the reversal starting to happen after that rate hike. And so I wouldn't be surprised if we see price start to roll over on itself into this coming week, right? And I have to be very careful, future me, be very careful, right? Because the pound could start rolling over early into the week, but we do have to be cognizant of the fact that we could be seeing a retracement on the yen as well before further upside. We can even take this, like, look at this, beautiful. I just freestyled that fib. Swing low to swing high. Where do we get this 618? Beautifully placed at the 8,000 level, that level of support that we've been ranging inside of. So once again, I would be careful to not take trades when both of these, when one, the yen is retracing, and then two, the pound is starting to roll over or in the process of trying to roll over on itself. And so, yeah, I hope that makes sense. Really quick, I'll go over the monthly on the pound. I'm a little bit all over the place, not for nothing. As far as the monthly is concerned, still playing around. Still just playing around. I wouldn't call for anything definitive just yet. Let's say we're trying to build a little bit of a base around that 122, 123 sort of area, this level of resistance. Now trying to turn it into support. But again, until we get a solid body close, like with strength, with conviction, like say even something like this, like I want to see a solid body above this box. If we can get something like that, it would look a little bit more definitive for a reversal to the upside or a push back to the upside after this big breakdown in the year of 22, excuse me. But until we see that, I'm still of the same sentiment. Like the resistance is still resistance. It still look great right here and literally just roll over into coming weeks. And so, as I've mentioned in every other index, I'll be looking more toward the weekly and daily for added context and clues about where price could be going next. And so that leads me into the trades, or rather the charts we'll be trading. Very, very strange week for me in the market. I did hold a trade into this week. I actually ended up holding it a little bit too long, a little bit greedy of me. And in my analysis, of course, my pre-market analysis prior to making these videos, I did get a chance to go through each of those little, those trade demons and hash them out. So I'll be happy to share. But we'll go ahead and get started on the weekly. Let me take another sip of my coffee before we move forward. 1 second. All right. And so with that, we have the pound against the yen on the weekly chart pulled up, and very interesting takes for this coming week, right? So I feel like I've highlighted this in many of my pre-market plans, but again, this all started with this big wick rejection of 166, this in confluence with the 618 swing high to swing low on the weekly chart. And so ever since that move sort of played out, we've been seeing further downside on GJ, excuse me. And so I even mentioned in my previous pre-market plan, 161 sort of 50, 162 sort of area is this range mid on the weekly. I would want to see clear weakness below that level to continue to take shorts. We saw that on the previous week's candle as well, that the week of the 13th. And so again, I was wanting for retracements to get short, and that's exactly what we saw. This is a little bit of a doji sort of indecision candle, but it's still a bearish candle. Not only that, it also printed below that weekly range mid, which allows me to believe that we should be seeing at least further downside into the 157 sort of area every time we've broken down into this range mid. Solid body as well. We have reached that 156, 157 range low, that previous weekly range high at 157, and so I would want to see that into this coming week, and obviously position myself on different retracements to get there. And so obviously, as we see these fucking huge wicks, I would not be surprised to see upper wick creation early into the week. Once again, seeing that I am expecting a retracement on both the yen and the dollar. Obviously, the dollar doesn't affect the yen that much, or rather GJ that much, but still just want to make that observation. Being that I'll be waiting for retracements on those early into the week, I should not be surprised, and I should be expecting upper wick creation early into the week into these previous range mid levels before downside, before forming the wick and turning bearish going to the downside. I hope that makes sense. And so that's exactly how I'll be playing it, right? I'll be waiting early in the week. I obviously don't trade Sundays and everything else, so I'll be waiting early in the week for that upper wick creation, that retracement on lower time frames, and then snipe it. I hate the word snipe. I don't even know why I said that. Position myself correctly on the wick creation, and then wait for the push lower. And so once again, we're still sort of within a range, right? Like we're at the mercy of the range. You can't say like, oh, like although we're in an uptrend, right? Like I can't take shorts, or we should only be taking, we can't really do that when we're in a range, right? Because when we get into these big pushes, very big push, we enter stages of like accumulation typically when we start to range like this. So either we get this big accumulation and then push forward like a squeeze, a move higher, or we're starting to see the makings of a reversal, excuse me. Off of the strength of this particular wick and push to the downside. Although I will say on the daily, it does look a little bit shitty, but yeah, I mean, I hope this makes sense. I hope this made sense for my future self. Once again, we are printing below this weekly range mid. That's enough for me to confirm that we'll be bearish into the next week. I should be expecting upper wick creation into these previous levels of structure before you move lower into this range low at 157. Every time we've broken below this range mid and made definitive moves, we always moved into that range low at 157. So why would this time be any different? At least that's how I'll be playing it, right? Obviously, if we start to reclaim and look good above this weekly range mid, I'll start to be sort of hands off, look at it from an intraday perspective, and go from there. But I hope that made sense. Let's go into the daily. Daily is looking, honestly, let me move this. We still have this symmetrical triangle, I will say, right? Like, actually, let me bring this back. Still have a symmetrical triangle. I will say this sort of price action very choppy, looking very shitty. I mean, I've gotten caught in ranges like this, nasty chop like this in the past, like particularly this one right here. This range, oh my goodness, was absolutely disgusting. And then look at how clean the price action was thereafter, right? It's always best to save your gunpowder, save your ammo for the moments where price starts to trend once again, instead of getting caught in the chop. And I'm sure a lot of people are getting caught in this very choppy environment. Although it's sort of like trending chop, it still looks like shit. Absolutely disgusting. And so it's very important that we navigate it the correct way. How do we do that, right? Once again, we do have this symmetrical triangle, which leads me to believe that the next move that we do make, as we continue to squeeze into this triangle, it's going to be a big one. Whether it's to the upside or to the downside, I do not know, which is why I'm going to be letting the candlesticks tell a story for me. As we can see, we had a lower low and lower high structure sort of forming. It's ended up turning into a higher high and higher low structure. We have the first, or rather we have a high, we have a higher low, we have a higher high. Obviously there are higher lows in between this, right? Like we could call this a higher low, higher high, higher low, higher high, higher low, and then the final higher high at 166. And now we're starting to see the reversal back down, right? We have a high here now. We have a low. We have another high. We have a low, another high, and finally a lower low on the most recent daily candle close. Although this is a wick, even the solid body is still lower than the previous candles. And so I say all of this to say, although we are in the chop, we can still be biased toward a bearish move in the market, excuse me. Because of the way price is printing, the way that the structure is starting to form. And so when I start to talk about this symmetrical triangle and a big move coming, right, as we're starting to see this structure form, a lower low and lower high structure, we could expect a big pop to the downside. Whether or not we see it, we do not know, obviously, because I don't have a crystal ball. But that is an observation I am making into this coming week. Another one I do want to make here as well is that this is a level of structure still. This 159 to 160 sort of area. Looking left, we've bounced from this level many times. And so again, as we start to try to to make moves and position ourselves, we need to be careful not to get caught up in these nasty wicks, these nasty sorts of consolidation and everything else. And it really, we have to rely on the intraday time frames, or my future self will have to rely on the intraday time frames not to get caught up in that way. And so overall, just to kind of drive the point home for the daily, I am biased towards sales at the moment, just again because of the lower low and lower high structure we're starting to form once again. Once we broke back below that 159 sort of area and started to get bigger wicks below those levels, even prior to, right, this break back below 162 is a break of structure, right? We started to get bullish above it. We can maintain ourselves above that level, and now we are reversing back below 162. So that again is enough for me to be bearish into this coming week. Obviously, in addition to everything I just mentioned about the lower lows, lower highs, and all this stuff. And then even outside of that, we do have a fib here, a 618 in confluence with 162 as well. That could also be an area for another lower high into this coming week, as we can see looking left into the previous lower highs as well. And yeah, I mean, I think it's pretty straightforward. It's pretty clear, regardless of how shitty the chop is, where we should be positioning ourselves in the market. And so that leads me into the 4 hour. It becomes a lot clearer on the 4 hour, right? Very well defined and clear range between literally 162 sort of area and then that August 22 low around 160, 159 sort of 50 area for us to play around. As I mentioned, I would be wanting to expect a retrace early into the week. And even, when we look at it on the 4 hour, it represents that perfect, like you get so much more added context looking at it from this perspective on the 4 hour, right? Because obviously I would laid everything out on the weekly. I mentioned everything on the daily. And now look at what we have on the 4 hour. Very well-defined range low, this level of support. We did get a reclaim here. We did get a, big break of structure here. I wouldn't be surprised if we ended up rolling over, but I mean, I can't take this lightly, this big engulfing candle back to the upside. We got a break of structure, now a reclaim, right? Either we get one of two things, a shallow sort of retest here, or rather one of three things, I'll say. Shallow retest, right, of the August 22 low, this level of liquidity, push lower. And I'll get into that a bit deeper on the 1 hour. Next option, we had a head and shoulders here. Head and shoulders typically have necklines. That neckline is right around 160, 80 sort of area. No fib confluence there. We could say that there is fib confluence though, because we have a local fib right here. Boom. That can act in confluence there as well. That's another area of interest. So we have a little bit deeper, like a medium sort of normal retest there as well at 160.85. And then we have the bigger retest, the swing high to swing low retest around 160, 150, and 162 overall. I would say that this area overall is where I would be comfortable getting short. And as we can see, once again, it's very well defined, right? Looking left, clearly defined level of structure, very well respected, acted as resistance multiple times, acted as support multiple times. And so overall, regardless of the fact that we have two other areas of interest, this third area of interest around 160, 150, and 162, that is my main area of interest. In the perfect world, right, if I can take the absolute perfect trade, I would wait for the 618 retracement and a rejection off of that level to then get short. I would place my stop, at the local high, or if it stopped up right at the 618, I would put it at the 786. If it stopped up at the 786, I would put it at that local high around 163 sort of area. And so that's exactly how I'll be wanting to play it. Once again, waiting for the retracement early into the week into one of these three areas of interest, either the August 22 low at 159.50, 160.80, or in between 160.170 and 162 sort of area. I hope that makes sense. It's very well defined here as well. Like nothing super crazy. Like literally, I feel like I have 5 lines on my screen. It should not be hard to interpret for my future self. Going into the 1 hour. Before I get into my plan for this week, I just want to address my trade from last week, right? Because I had held a trade I had entered right here, stop was up here, target was down here. Extremely fucking greedy. And so I got stopped out, as I should have, because for being a greedy little fuck. I held this. I held this from last week, right? So I was holding it all the way. I literally held this how many days? I held this for 5 days, literally way too long. I literally, oh my goodness, I typically only hold trades for like 3 days, and so if I would have put that into perspective, right, that 3 days, I should have exited. I had balls of steel holding this trade, first of all, right, because I ended the week right here. Market opens, I get a fucking huge retracement into my entry, tags my entry with momentum, and I'm like, fuck, should I close this? I'm like, no, I'm gonna hold it because that's what my plan is, and that's just what it's gonna be. Plan plays out perfectly. I had my target a little bit lower than it should have been. I mean, it's just one of those things. Like, just being greedy is just not worth it, right? Like, I had a 3R trade right here, a 2.5R, right? Regardless, it doesn't matter. 2.5. Oh, actually, it might have been 3R because it was 162.30. It was 3R, right? I had every opportunity. Literally. I woke up to this candle. Not when it. I woke up to this candle when it was engulfing. So I thought that we would see further downside into 158.57, and I wanted to maximize obviously my profits on the trade. When I saw that this candle bounced and wicked, like had a huge rejection into this August 22 low, for whatever reason, I thought to hold it. And now looking at it, right, obviously hindsight is 2020. This candle is looking like it wants to fucking go to the moon. Like, this is not something that you would want to hold on, right? But for whatever reason, maybe it was because of the downside prior, I just thought to hold it. And so I held it for way too long. I had every opportunity as well to cut it after like a 50% retracement at 160.67. I said, no, fuck it. I had such balls of steel holding it after it retraced to my entry the first time. I was like, yo, I can survive anything. And so when we got right here, I was like, awesome, we're finally gonna get back to the downside. I had another opportunity to close at 160.81. I was like, no, fuck it, I'm gonna hold it. Another opportunity right here. I literally almost got slipped here. I stood in the position. I had another opportunity to close in profit. I said no. And then finally on the 5th day, I got stopped out. Big lesson in this. Very big lesson. One is that typically I hold trades maximum 3-4 days, right? Not even 4. Max like 3.5 days type of thing. I should have held true to my rules in that perspective. Did not, and I paid the price. Number 2. Being greedy overall. This is a theme that I had here as well, in my previous pre-market plan as well. Just being greedy. I've had so many situations where I have stopped myself from being greedy, and I just think that I need to realign with that. Like, not even, I mean, it's not even a big deal, right? Like, it's one trade, but it's one of those things where, like, you can't fall in love with a position. When I saw that I felt invincible after I survived this retracement back to my entry. I was like, yo, if I can survive another retracement, I'm gonna be a fucking millionaire one trade, and that's obviously the wrong mindset to have around trading, as well, right? Like, the signs are always there. This big wick to the downside. Off the strength of that, even if we would have seen further downside thereafter, off the strength of this candle and what price is telling me, what the chart is telling me, I should have closed it, right? You're supposed to trade the chart and not your P&L. For whatever reason, the greed blinded me in this particular case, and I paid the price. Once again, it is what it is. And I just want to outline, holding this position as long as I did, you might think like, oh, like, you're just holding a position, like, but when you're checking the chart actively, when you're going and seeing, trying to manage the position, it's so tasking on your trading psychology. I held that trade for 5 fucking days, and that was what, 3rd day into the week that I got stopped. 3rd day into the week, and I was mentally spent. I literally did not want to. I didn't take any other trades because I was so fucking spent holding on to this one trade and just trying to manage it, not only mentally but physically as well. Trying to debate. Oh, like, when I had the chance to close it here, oh, should I close it? No, I'm going to hold it. Had another chance. Oh, should I close it? No, I'm going to hold it. And then finally getting stopped and be like, fuck, I should have closed it here. I should have closed it here. I should have closed it here, type of thing. Like, all 3 opportunities I had to close it. And yeah, so I want to outline that for my future self, because once again, like, I feel like I'm a master at my own strategy. You're a master of your own strategy, future me. But the thing, obviously every trader understands that it becomes your psychology thereafter, managing your greed, managing, your active management overall. Like, these are all factors at play. Like, we can all predict the chart. I predict the chart perfectly every week, but executing it is another story, future me. So I just want you to take this time out. If you're, listening back to this, or, whatever it is. I just want you to be present right now and listening to the words that I'm telling you. It pays to be patient. One, it pays to respect what the chart is telling you. Two, and three, once again, you don't want to waste all of your mental capital on one position. You can only make 1 to 2 emotional decisions per day, but if you're making 20 emotional decisions but not acting on any of them, it's just as physically taxing or emotionally taxing as actually acting on it. So I just want to outline that, right? Like, again, I'm sure a lot of other people have found themselves in similar situations in the past. I don't find myself in this situation often, but the fact that I have is enough for me to want to address it for my future self on video and everything else. So I hope that made sense. I hope it wasn't too long-winded. Let me take a sip of coffee here. And let's move on. And so going into this, this week's pre-market plan, very simple and straightforward. As I mentioned on the 4-hour, right, I'm literally waiting for a retracement into these different levels, but there are intraday levels that we can entertain and look at as well. Just kind of, cross-reference everything. These bigger sort of levels, these bigger ranges, of course, ideal area for me is a 161, sort of 70, 80 area, 162 area, and then outside of that, the August 22 break and retest. And so, right, where are those areas? We have, of course, this first one here at the 161 sort of 80 area in confluence with the January 23 high. I would take sells on weakness there all day, every day. We also have the October 22 low at 160.55, 160 sort of 80, that range that I outlined as well in the 4-hour. I would take sells there all day, every day. And then outside of that, we have the August 22 low, which I would take sells on a break and retest of. Lastly, January 23 mid, I'll take break retest of that point all day, every day as well. Excuse me, not a ton of traffic looking left, as we can see. And so I know that in my previous pre-market plan, I wouldn't have taken trades from this range mid, but now we have kind of cleared the lanes out here as well. There's a lot more clean traffic on this side of the chart after getting past all of this consolidation. Excuse me, it's been very long time, about a week, since we've generated a ton of consolidation into this range. And so with that, it makes it a bit cleaner into coming weeks, and why I want to outline why I would take trades here now rather than why I wouldn't back then. And so overall, just kind of bringing it into the present, we do have a short term, or rather a local swing high to swing low fib here as well. So it looks like we're printing right on the 618, right, to open up the week. So honestly, I've had many instances where my entire plan plays out at the open, like opening bell 2-3 hours in, and my entire plan is done, like 500 pip move gone, right? Like, I don't trade Sunday, so I'm not gonna catch that, but price trade very well, literally looks like around the top here as well, very well could roll back over below the August 22 low, break, retest, and move to the downside. We also have a very well-defined descending channel, this trend line here as well. We have 3 touches currently. I would like to see, typically, these trend lines develop a little bit more before that big break. I wouldn't be surprised, once again, if we get into the 158.60s and everything else, form a little W, then start to rally, but we could see that shallower retest above the August 22 low before a push and break of that channel. So I just want to remain cognizant of all of those different things, because both sides can happen, and they have in the past. And so again, more near term, 618 here is valid. Very very high chance that we get that break retest of the August 22 low. I would take it, but if it's on Sunday, I probably wouldn't. And then outside of that, I would be wanting to wait for the retracements of into these other areas around 160.80 and then 161.80, 162 sort of area, because these are well-defined levels of structure. I'm just trying to make sure I covered everything here. Outside of that, right, like if we did get a break above 162 sort of area, I would sit in my hands. I would sit in my hands until 162.50. I would look at it on the 4-hour and see where we're at. That next level, right? If we break above 161.80 and we start to rally, I would probably sit on my hands until 164, because that's the highest and most well-respected level of structure that we have at the moment. And so I would sit on my hands on the rally until 164 until I see the reaction to 164. So I hope that made sense. Literally, I have every fucking area of interest for me spelled out here in my future self. And so I think it's pretty straightforward. I hope that makes sense. Moving into the next chart, excuse me. Gold. And so I missed so many trades on gold between the last 2 weeks, and I just it is what it is. Like I mentioned, that GJ trade had me mentally spent, so I didn't even want to entertain gold. I was cool not to trade at all. And so that brings me into obviously the weekly charts on gold. 1 second here. What are my bearings about me? Okay. And so as I mentioned in this previous pre-market plan, right? I was expecting a retrace. That's exactly what we got, a retrace and a retest of the previous level of structure that we broke out of. But a couple of things that concerned me when we look at this retracement, right? Or rather this weekly candle close. One, closed below the local level of resistance at 1991, 1992 sort of area. Looking left, this is a very well respected level of structure. Anytime we've moved into and not solid bodied above this level of structure, we have then moved to the downside. This is a very well defined, we can call this even a range high, right? Because there are no solid body closes. You know, we've wicked, but never really solid bodied outside of back in like 2020. And so that's the first cause for concern. Second cause for concern, right? We get a big momentum candle, big engulfing candle to the upside. Now we get this little doji, right? This little, this little indecision candle. Candles like this are typically the makings of an evening star. Evening star formations are reversal candlestick patterns, right? Very similar, literally the exact same formation that we see right here. This is an evening star. And although this is a different sort of looking evening star, still very reminiscent, very similar. We could also point out this one right here. You can look at any chart and find them. And so I want to remain cognizant of that. This could be a potential evening star reversal back into all the way back into like 1800s type of thing. And so, as far as where I want to position myself in the market, obviously I am a gold bull, especially with the dollar weakness we have been seeing. As I mentioned, very similar to GJ, I am expecting a retracement for the dollar early into the week, a bullish retracement into previous levels that we broke down from. And so, I would not be surprised to expect further downside on gold as well, or at least downside into the previous level of structure before a potential bounce. But again, I don't want to rule out the fact that this could be a full reversal back to the downside, depending on what we see on the dollar. Going into the daily, very well-defined level of structure. The daily chart on gold overall is just looking absolutely magnificent. Just looks beautiful to me from a structural perspective, and it's a shame I've been missing so many trades on it. So when we look left, right, very well-defined level of structure at 1958, 1959 sort of level. We've used this level as resistance and support multiple times in the past, although it was short in the past that we used it as support. It still is valid, right? And I want to, where is this? Let me delete that. And so once again, right, like I would love to see further gold strength, but I would be stupid not to understand that we should probably be seeing a retracement here soon. And so I wouldn't rule it out, but I probably wouldn't put a ton of weight into a shallow retest here at 1959, although it can happen and I would take buys from it. I think what would be a little bit more logical is a 1905, 1910 sort of retest before a move higher. And I can take the swing high, or rather swing low to swing high on the fib. And we have a couple different areas that we can take a look at here as well. Of course, the first being the 50 at 1910, and then right under that 1887 being the 618. It doesn't add a ton of context for me, but when I bring it up here, this local sort of level from 1886 to the swing high, we do have a little bit more confluence, a bit more context here as well. We have the 786 at 1905 and then the 618 at the 1920s and everything else, both very big intraday levels, and I'll get into that here shortly. And so once again, I would take a shallow retest on gold, but once again, I'm expecting a much bigger retest, especially after such a big move to the upside. Would not be surprised if we see 1920 or even in the 1800s, the mid 1800s, prior to getting long again. Looking out on the 4 hour, it looks a ton clearer here as well. A couple of different things. We have a double top here first, very fickle trend line as well. And obviously we know what happens when we see these kinds of trend lines. Either we get the big squeeze or we get a fickle break of a break of this fickle trend line into the downside, right? And we can even take these fibs. Always adds a bit more context and definitely defines structures and levels of interest for us to look into this coming week. The first being the 382, a shallow retest of 1960. This is also sort of the neckline for the double top. So again, I don't want to put a ton of weight into this, although it is a level of structure and confluence with the 382 and the trend line. This is still a very big level, right? Like if this does break, it's going to be a massive move into wherever it lands, whether it's 1933 or lower than that. Next level, of course, is 1933 overall. This is a well-defined sort of range mid. I wouldn't put a ton of stock in this unless I get a very clean bounce. The bigger areas of interest for me are 1960 and 1905, between 1905 and sort of 1920 sort of area, and confluence with the 786. It's just a lot more well-defined looking left, right? Like we've used it as resistance in the past, support here as well, and I'm sure I could find other areas that it's been an SR level as well. And so once again, it adds a bit more conviction for me to want to take loans there rather than the 1933 618 sort of retracement. So once again, 3 areas of interest. First, this 1958 level. It's a bit early for me. I probably would not, in a perfect world, I wouldn't take this setup. Next being the 1930 sort of area. Perfect world, I probably wouldn't take this setup either. But in the perfect world, I would get a retracement on 1905 sort of area before I move higher. Obviously, in a perfect world, we would get a bounce off of 1960 and then a move above 2000, a break retest above 2000. Which I would also consider, right? So once again, I have the 1960 retrace, I have the 1930 retrace, I have the 1905 retrace, and then I have the break and retest of 2000 that I would consider. Hope that makes sense. Looking at it on the 1 hour, adds a ton more context as always. And so when we look at it on the 4 hour, it doesn't look as strong, right? But on the 1 hour, it looks a ton better. First very big area of interest, and this is where I missed my first trade because we had so much momentum coming into this level. I was like, nah, no way we bounce. And then exactly what I didn't think was going to happen did. That bounce and move, massive move to the upside. And so that again, that leaves us within this sort of range here, right? We have a range between 1970 and sort of 2000 area as well. Big break of this trend line, and obviously once again looking at it on the 4 hour and higher time frames, it definitely adds a ton of more context to potentially see more downside into this coming week. But again, I don't want to rule out this range, right? I don't want to rule out these levels of structure because all day every day, right? Like if we get a big retreat, or rather a retest with strength above 1970 sort of area, looking left, this is a potential area that can act as support, so I would consider it. Perfect world, 1959 all day, every day. Very similar to what we saw back here. And at least on the 1 hour, it is a bit more well-defined as an area of structure. I definitely take 1959 retest over 1972 all day, every day. And then outside of that, the perfect world retracements being 1934, because it's obviously well-defined here, acted as a very strong level of support and resistance in the past. And then last resort being that 1910, 1905 sort of area. So once again, we do have a very near-term level of support, although, you might, it's a little bit risky, I'll be honest, but this near-term level of support in 1969 and 1970 sort of area. We have the 1959 area here as well, and then we have the stronger areas at 1937 and 1910 that I would all consider taking loans from. We also have different fib confluences here as well. We have the swing high to swing low, adding in that 1959 level of support and confluence and everything else, and then of course we have, what is it right here? Right, and then we have that local swing high to swing low, adding a bit more conviction and context around the 1970 area, being that it is acting in confluence with the 618. So once again, we have the 618 and 1959, and then we have the 618 and 1972. And so I hope that makes sense. Once again, these are all areas of interest for me to want to take a trade from. And obviously I'll be wanting to wait for stability at each of these levels, right? I don't want to buy an engulfing candle into these levels. And so that pretty much sums it for me. Nothing super crazy. Just trying to think, did I miss anything here? Just to sum everything up, once again, GJ, I'm waiting for sells on weakness from each of these areas. Of course, 160 sort of 80 area, 160, 65 area is valid for me. Perfect world, I would wait for the 161 160, 180 sort of area sells. And then outside of that, even more perfect world, I would take the break retest below the August 22 low and lower than that. Also would consider the break retest of 158 sort of 60 area. We are already playing around at the local 618 on the market open, so I would not be surprised if we see immediate downside. And then outside of that, we do have a local 618 here as well at 160.65, and a much more macro 618 here at 161.60 area. All big and valid levels of interest, areas of interest. Excuse me. Who wants to take shorts from? Going back into gold. Very straightforward here as well. Expecting a big retracement on gold overall. First of which being into 1972. If we see stability there, I'll take buys all day, every day. Also 1959, I will wait for a retracement, wait for stability there. Also, last resorts at 1936, 1935 sort of area, and then finally 1910 and 1905 sort of area for retracements to get into buys. Once again, I would be expecting a strong rally and retracement into previous levels on the dollar, as well as retracements for the yen. And so obviously early into the week, I'll be wanting to play it as such. So I hope that made sense. Future me, love you, bro. God bless you. I hope you're living your life to the utmost. Always remember, you're in control. This is what you do, like, you know. God bless you. I rebuke anything bad in the name of Jesus. Cast out any spirits of complacency, fear, greed, doubt, fear. I already said fear, incompetence, inconsistency, uncertainty, hesitation. I cast all those spirits out in the name of Jesus. In the name of Jesus, amen. Thank you, Jesus. Yeah, no, this is my first time saying a prayer on here, but yeah, like I said, God bless you guys. God bless you, future me, and yeah, God bless everybody watching, everybody not watching, everybody thinking about watching, and yeah, take care.